Namaste, good morning, and today's coverage or the focus is going to be section 33 and section 35. The again 35 is a long travel section, so section 33 and 35 are going to be the coverage area. Right. The first, before entering 33, a quick look at what we have completed. We have completed asset based deductions, which is 30, 31, 32. Okay, 30 expenses in relation to building, 31 expenses in relation to plant, machinery, and furniture. 32 is the long travel depreciation, where we saw slightly open in slightly open. Okay, the long travel depreciation, where we saw various aspects of depreciation like normal, additional, proportionate, unabsorbed, and depreciation for electricity companies. The straight line basis that gets importance only at the time of sales, not anywhere else. And then we are moving on to section 33. Here, deposit based deduction. Normally, only expenditure will be allowed as deduction. Normally, expenditure will only be allowed as deduction. But here is an example. Here is a set of cases, sections, which are going to tell us if you deposit money, you can claim deduction. And they are also going to say what for the deposit has to be utilized. There are two sections which gets importance here. Two sections speaks about deposit based deductions. One is plantation sector, that is tea, coffee, rubber. One is the plantation sector which gets the deduction. The other is the oil and natural gas. But in terms of examination question, only plantation sector gets importance. In terms of examination, only plantation sector is a repeated question. I haven't seen on the site restoration fund, etc., a question. So let's not worry about it. Right? We start with section 33AB. Tea, coffee, rubber development account. That is the name of the account in which we are going to make the deposit. That is the name of the account in which deposit is going to be made. Okay. Tea, coffee, rubber. So it is for three sectors: plantation sector, tea, coffee, rubber. As soon as we study this, we also try to recollect that these are considered as partly business, partly agricultural income. All these three, tea, coffee, rubber, are considered as partly business, partly agricultural income. That leads us to understand which part business, which part agriculture. We will come to that. Why such a segregation? Normally, agricultural income from India is exempt from tax. Before introducing this partly agriculture, partly business provision, this was wholly exempt from tax. This was wholly exempt from tax. So normally, agricultural income from India is exempt from tax. But then these are cash-rich industries or profit-rich industries. So they identified these three industries and said, a part of the income from these three industries will be agriculture, other part of it will be business income. You are in the meeting now, Ananya.
Thank you, sir.
A part of the income is agriculture. A part of the income became business because they were cash rich industries. Okay. So having that in the mind also, we should approach this section. Right. Coming back to PGBP. Section 33AB. Okay. What is the intention of the section? Plow back of profits. The intention is that the preamble will say, ensure that after you make the profit, you have two options. Either to retain it in the business or to take it over. If it is companies as dividend, for partners and proprietor, it is withdrawal. I want you to reinvest in the business. So I'm motivating you, after you earn a profit, invest it back in the business and earn the, ensure that you are continuing the business in the long term. So the intention is plowing back of profits. Okay. So after the profits are over, if you keep the money deposited in a special account, okay, which is tea, coffee, rubber development account, depending upon the nature of business, or any account, any bank which is notified by the RBI, either in NABARD or any bank which is notified by the board, sorry, not RBI, by the board, a respective board, tea board, coffee board. If you make the deposit, you will get it. Make the deposit within 6 months. Make the deposit within 6 months. Okay. And post that, you will be able to claim the deduction. But the law also says what purpose you should use the deposit. The intention is to make you reinvest in the business. So buy plant and machinery which is to be used for field activity. Not an air conditioner for your office. Not a car for your personal purposes. Buy machinery and plant, irrigation equipment, plowing, tractors, like that. Buy plant and machinery which is going to be used, okay, in the field. That is one benefit. That is one thing you can invest on. Or if there are some uncultivated area, in that area start cultivating, because you need to invest hugely on making the land fit for cultivation in these sectors. Okay, I will give you deduction. If you sell off that asset, again you are under problem. 8 years you should hold the asset. Okay, let's go slowly. Deduction is available for assessees engaged in growing and manufacturing of tea, coffee, rubber. Not for the trader, not for the Nayar Kadai which you see outside. Okay, right? It is only for growing and manufacturing. Okay, assessee should have deposited in a special account. Special account is by NABARD. Okay, with the NABARD or any of the account approved by the respective board. Deposit has to be made. Deposit has to be made within 6 months. Deposit has to be made within 6 months from the end of the year or before due date of filing returns. Okay, now obviously due date is October 31st, so September 30th, so 6 months. Okay, now this is the right time to tell you something which you all to understand. Majority of us have a myth or a feeling that 44AB is the only section which talks about audit. All through PGBP you will see audits. Today all the sections which we are going to study is going to say as audit is mandatory. Okay, audit mandatory is not just 44AB. That might be the popular section where many assessees perform. But why? Because many people think within 6 months from end of the before due date of filing, they are talking about 31st July. No, no, no. The next condition, assessee has to get his book compulsorily audited. Okay, right? So anyway, it is October 31st. Okay, you need not fall under 44AB for this. Anyway, it is October 31st, remember. So, mandatory audit. Compulsorily, the assessee has to get his books audited. Okay. And okay, because whenever there are conditions in income tax law, okay, there need to be a honest person to certify. So they will say, start okay. Amount kept deposited should be utilized for purchase of assets. What for the money should be utilized? The amount kept deposited should be utilized for purchase of asset, and the asset does not include office premises, plant and machinery which enjoys 100% depreciation, or whatever is the 11th schedule, that is whatever you saw there, new plant and machinery, that definition. So remember, it should be used for field activity. One benefit they will give you is computers used for office purposes, you can still claim the benefit. You can claim, okay. At that time when the section was introduced, computer was just coming into the market. So they said computers, even though it is not for field purposes, even if it is used for office purposes. Such asset which has been purchased out of the amount deposited should not be transferred within 8 years. Okay, should not be transferred within 8 years. If all these conditions are satisfied, what is the deduction? Amount deposited or 40% of the profits, whichever is less. Amount deposited or 40% of the profits as computed under PGBP before claiming 33AB. Profits as computed, provide depreciation, everything. Okay, right? Okay, now the next thing to answer is, can I withdraw the amount only for specified purpose? If you withdraw it for some other purpose, then in the year of withdrawal, it becomes taxable. You deposited, I gave you deduction with the belief that you are going to buy an asset. I gave you deduction with the belief that you are going to use it for the field activity. Now you are withdrawing the money. You can withdraw. I'm not saying you cannot withdraw, but in the year of withdrawal, I will tax it if you don't use it for the purpose of asset, etc. However, if the withdrawal is due to death of the assessee, partition of HUF, or liquidation of a company, then it is not taxable. Repeating it, if the withdrawal is due to death of the assessee, partition of HUF, liquidation of a company, then it is not taxable. If it is due to discontinuance of business or dissolution of a firm, I will tax it. Okay. The amount kept deposited shall be withdrawn only for the purpose of utilization, where it is withdrawn but not used for specified purpose. The entire amount withdrawn becomes a taxable amount. Okay. This apart, you shall also withdraw in the following circumstances. Partition HUF withdrawal amount is not taxable, whereas closure of business and dissolution of firm withdrawal account becomes taxable. Where the newly purchased asset is transferred within 8 years, then deduction already provided will be withdrawn. Same, it is as if you have deposited but not used it for the specified purpose. Okay. However, where the transfer is to government, compulsory acquisition, then you don't have an option. Okay, in that case, it is different. Yeah, the question here is, I am depositing within 6 months. Within what time I should have purchased the asset? Within what time I should have invested? Till today, law is silent there. You can even purchase it after 10 years. But from the date of purchase, you should hold for 8 years, not from the date of deposit. So law is silent when you should. You can keep the money deposited permanently for a longer time also, not a problem. So as we were discussing, these are partly agriculture, partly business income. Okay, we call it as Rule 7A. Okay, we call them as Rule 7A, 7B, 8, etc. Okay, tea and coffee 60-40 normally. Tea and coffee 60-40. Coffee in a raw format without curing, etc. Without grounding and roasting, it is 75-25. Rubber 65-35. 65-35. Larger portion goes for agriculture, smaller portion for business. Please read it once. Please read through the section once. Yeah. One other doubt that is very valid, which I want to also take it up and answer is, should I compute 30%, 40%, whatever it is, and then provide 33AB, or should I provide 33AB first and then divide? We should provide 33AB first. First, compute the income. For computing income, PGBP chapter. After that, only this division. After dividing, if there is any brought forward loss, okay. I'm going to do a question and make you more clear on this. First, on this table, that is partly agriculture, partly business income. On this table, let us do a question and then go for 33AB related question. I am in the new material given to you today, page number 4. Vivita, a resident, an ordinary resident in India, has derived of the various income from various operations relating to plantations. Income from rubber plant, income from sale of coffee grown and cured. So it is not roasted and grinded. 2575. 2575. Income from coffee grown, cured, roasted and grounded. 40-60. Okay, அவ்வளோ சீக்கிரம் சொல்லிருக்கூடாது. Okay, in Colombo. Agricultural income in India is only exempt. Agricultural income from outside India taxable fully. So it is in this case Colombo. Okay, it is taxable. That's why the question itself starts with she is a ROR. Okay, she is a ROR. The question starts with she is a ROR. And the only difference in examination is within bracket they don't give answers. Okay, right? Income from sale of tea, okay, 60-40. Income from sapling and seeding, okay, this is fully exempt. The Supreme Court judgment has said that this is fully exempt. Okay, we are required to compute the business income and agricultural income. rubber 65-35. The larger portion goes to agriculture. Okay, the smaller portion goes to business. I'm getting 540, 590. Is fully business income. You're getting it? Five lakh 40,000, 5,90,000 for the business and agricultural income respectively. This is more to do with 7A, 7B. Okay. Now I'm going into our next question, which has 33AB. Okay. Modi, an individual engaged in the business of growing and manufacturing tea in India. For the year ended 31st March, his composite business profit before allowing 33 AB is 60 lakhs. He deposited 11 lakhs in tea development account. During the previous year 2021, Modi had a business loss 14 lakhs which has been carried forward. Determine the business income for him and tax payable. Part B of the question. On 25th January 2023, he withdraws 10 lakhs from deposit account which is utilized as under. What will be the treatment? Part C. What will be your answer if the machine that is purchased for 6 lakhs is sold in April 24 for 8 lakhs? Let's understand. Let's answer part wise. Part A is current year question. Part B and part C are subsequent years, the event happening after that. Read through. This will to a larger extent clarify the doubts of when 33AB, when the loss has to be set off, etc. Okay. Profit before claiming 33AB. Profit before claiming 33AB 60 lakhs. Expenditure under 33AB. Expenditure under 33AB. 40% of profits, that is 60 lakhs into 40%. Amount deposited in development account within 6 months, 11 lakhs. Whichever is less is allowed as a deduction. Whichever is less is allowed as a deduction. Profit after claiming 33AB is 60 lakhs minus 11 lakhs, 49 lakhs. Am I clear to you? Okay, it should be done before the split. Before the split. Now only the split can take place between business and agricultural. Okay. Agricultural income 60% of profits. So which is tax exempt into 60%, 29 lakh 40,000. Business income, the remaining 40%, okay, 49 lakhs into 40%. This is the business income part of it. This is the business income part of it. Less brought forward business loss. Less brought forward business loss. There is a loss which needs to be adjusted. Okay, for the financial year 2021, he has a for the financial year 2021, there is a business loss of 14 lakhs. Okay, during the previous year 2021, he had a business loss of 14 lakhs, which needs to be adjusted. Which needs to be adjusted. 14 lakhs. Okay, so taxable business income. Taxable business income 5,60,000. So it should give you a reasonable idea now when deposit has to be adjusted. Deposit adjustment, profit only should be split. Okay, the profit only should be split in the ratio of 60:40 or whatever ratio depending upon the business, and then computed. Okay, okay, yeah. The question has also asked us to find out the tax payable. We have determined the business income. We have determined the business income. How much is the tax coming to? Individual. 1 lakh? Individual. 24. 2 lakh 54, 254, 25,000, for that is including cessation. 8 lakh 60,500. 5 lakhs income, 8 lakhs tax. Uh, that is where I am coming into. Thanks. Okay, somebody remembers. I'm just trying to recollect. Okay, though we have a separate chapter, I'm just trying to recollect. Okay, when you were all young, you studied something. Okay. Okay, so how to tax when there is both non-agricultural income and agricultural income? Okay, but அது கூட அவ்வளோ வராதுன்னு நினைக்கிறேன், but I will check. Okay, computation of tax. Computation of tax. Okay, time to recollect. If you don't remember, leave it. Okay, we will do it again in assessment of individual. Okay, step 1, total income including agricultural income. Total income including agricultural income, 29 lakh 40,000 plus 5 lakh 60,000. Total income including agricultural income, okay, plus 5 lakh 60,000. Okay, 35 lakhs. 2, tax on step 1, the base tax. We all know 35 lakhs minus 10 lakhs into 30% plus 1 lakh 12,500. 8 lakh 62,500. 8 lakh 60. Oh, this is what you said. There is a step 3, step 4. Yeah. 8 lakh 62,500. Okay, so this is tax on step 1. Step 3, basic exemption limit plus agri income. Okay, 2,50,000 is the basic exemption limit plus agriculture income of 29,40,000. 2,50,000 plus agricultural income of 29,40,000. 4, tax on step 3. Okay, same formula. Okay, 21 lakh 90,000. 21 lakh 90,000 into 30%. 21 lakh 90,000 into 30% plus 1 lakh 12,500. 5, net base tax. Okay, net base tax is nothing but step 2 minus step 4. Step 2 minus step 4. 93,000. And HEC at the rate of 4%. HEC at the rate of 4%. Total tax payable. Rebate is up to 5 lakhs. That is not rebate on agriculture. It's a normal rebate under 87A only if the total income does not exceed 5 lakhs. In this case, we saw 5 lakh 60,000. So no rebate. கண்டுபிடிச்ச எனக்கு சொல்லி கொடு. So friends, though we will study it later, I just want you to remember, whenever for an individual, for those who are taxable at slab rates, for companies and other things, no problem. For an individual, when they have agree and non-agree income, aggregation of tax, that's what we call it as. So it needs to be worked out like this. I'm going to part B of the question. You are over. If anybody is not over, please stop. Raja, you got it. On 25th Jan 2023, so financial year 22-23, he withdraws 10 lakhs from the deposit account, 6 lakhs for purchase of non-depreciable assets as per the scheme. Fine, you can still enjoy the benefit. 3 lakhs for purchase of machinery at office, not allowed. And 1 lakh other expenses, not allowed. Okay, not allowed means it will become taxable. Okay, for the financial year 2023, 22-23. Amount withdrawn but not utilized for specified purpose. Amount withdrawn but not used for specified purpose. Purchase of plant as per scheme, nothing is taxable. You have used it for specified purpose only. You have used it for specified purpose. Purchase of office equipment. Purchase of office equipment, 3 lakhs. Purchase of office equipment, 3 lakhs. Okay. Purchase of office equipment, 3 lakhs. Other expenses, 1 lakh. Other expenses, 1 lakh. Okay. These two becomes taxable. Now I want you all to understand something. 40% of this only is taxable. Because this is the business income. That is why he was asking me a doubt. Where will you deduct this 11 lakhs? Had I deducted after the split, then the entire business income would have been taxable. Oh, that year, if 60 lakhs, no deposit has been made. In this 60 lakhs, I would not have taxed the entire 60 lakhs. I would have taxed only 40% of 60 lakhs. I would have taxed only 40% of 60 lakhs. Okay. But I provided deduction and then arrived at my business income. So now when I withdraw the deduction also, it needs to be split into agricultural and business income. Okay, right? So coming back, total business income. We are not computing tax because that is not asked. I mean, other details are not there. Okay. Out of this, agricultural income will be 60%. So 4 lakhs into 60% agricultural. Okay. Business income 40%. So whenever I withdraw also, I need to be careful to split it between agricultural income and business income. What will be your answer? If the machine that is purchased for 6 lakhs is sold in 2024 for 8 lakhs. Okay. First, what is the law saying? Okay. Asset purchased using the deposited money should be utilized for or should not be transferred for 8 years from the date of purchase, not from the date of deposit, from the date of purchase. Where it is transferred, then it becomes taxable. So that 6 lakhs which I gave it here, that 6 lakhs which I gave it here, now I need to tax it. Okay. So withdrawal of benefit is 6 lakhs. Okay. 6 lakhs. Again, okay, out of this agricultural will be 6 lakhs into 60% and business will be 6 lakhs into 40%. Okay, again from this I need to split between agricultural and business. Agriculture will be 6 lakhs into 60% and business will be 6 lakhs into 40%. Capital gains, that 2 lakhs. Okay, capital gains will be, okay, full value of consideration 8 lakhs less cost of acquisition 6 lakhs. Okay, this will be short term capital gain. This will be short term capital gain 2 lakhs. This will be short term capital gain of 2 lakhs. Yeah. Okay. So over and above the original cost, always remember it will go to capital gain. Whole of today's class we will be keeping on repeating that. Over and above the original cost, it will be capital gain. So whenever there is a question on 33AB, which we will again do when we do assessment of companies. Okay, please remember the split when the loss has to be adjusted, and if at all it's an individual aggregation will. Can change the chart. So this is the most important theory we can see. That is 33AB plantation sector. I mean the questionable area. The non-questionable area is 33ABA site restoration. I haven't seen question on this. Okay, this is for petroleum and natural gas, ONGC, Reliance Petrochemicals, like that. Some companies can avail this. Okay, the deduction is similar to this. Okay, but 20%. All other conditions are same. Actual amount deposited or 20% of profits, whichever is less. It is 20%, not 40%. Otherwise, all conditions are same. Quickly read through, please. Same conditions with regard to deposit, etc. The fund name, the account name is Site Restoration Fund. It is the Ministry of Oil and Natural Gas. Otherwise, all the conditions are the same. Here, there will not be a split. It will be fully taxable. That's all. Yeah. But the most popular question is 33AB. Okay. Section 34 is not there in the law now. So we are moving on to section 35. Okay. 30, 31, 32, 33 we covered. We are now moving on to section 35, which is a long travel section. Basically, the chart of section 35. Okay. Basically, the chart of, if you put section 35 on top of it, there will be 4 falling branches. The chart of section 35, okay, is like this. Please write in your notebook section 35, 4 falling branches in that. Okay. The extreme left is scientific research expenditure. Okay. The extreme left is scientific research expenditure. The second one is specified business. The second one is specified business. The third one is amortization. The third one is amortization. The fourth one is social welfare expenditure. Social welfare expenditure. Our section 35 is divided into 4, my dear friends. If you look at as a chart, scientific research expenses, specified business, amortization, and social welfare deductions. All these things is coming in the basket of section 35. Why should something fall under section 35? Because it is a capital expenditure which is going to be allowed as deduction. If deduction is as a percentage of asset, then they will take it to section 32. If asset itself can be claimed as deduction, if asset itself can be claimed as deduction, then they will make it fall under section 35. Then they will make it fall under section 35. Right. The first is promotion of scientific research. The first section here is promotion of scientific research expenditure. What is this? Advancement of knowledge, okay, in the field of natural or applied science, etc. If you spend on research, you are going to get this deduction. If you spend on research, the spending can be two-way. One, you yourself have a research and development wing, that is department, and spend it. Get the project approved by the ministry and start spending it. Two, you don't have it, but you are giving to an external agency, approved research institutions and centers for doing the research. So the research can be either in-house, okay, or, and both can be used, contribution to external agency. It can be both you can do or any one you can do, you will get it. When you were all studying inter, you would have studied something known as weighted deduction. Weighted means over and above what you are spending. If you spend 100 rupees, they might, to promote a sector, they might give you 150, 125, 200, like that. All those weighted deductions are gone now. All those weighted deductions are no more there. Okay, it is not from your year, from financial year 2021 itself, it is not there. 31/3/20 is the last year for weighted deductions. Okay, they have removed it. So that's why you will see, be it manufacturing or non-manufacturing. Enna problem na? Okay, accidentally, or if you take past question papers answers, it will not tally, because there they would have given 150%, 125%, 200%. But our answer will be based upon the current year provision. Okay, that's why I always feel in income tax there is nothing called past question paper inclusion. You can just understand what is the pattern of question. Okay, it is not a static subject. Okay, accountancy till the date is balance sheet as on 1991. Okay, and still it can continue for another 20 years also. Okay, with 1991 balance sheet you can still work out. Okay, which is possible. But inga, if you, because PGBP changed larger, not due to finance, they announced it before itself. If since you studied 32 till last year, we were studying something known as 32 AD, investment allowance for four states of, for units located in the four states of Andhra, Telangana, Bihar and West Bengal. 35% is the additional depreciation. Apart from that, they will get 15% as investment allowance. So accidentally, if you spill over an answer, no, you will get a totally different answer. That should not worry you at all. Okay, because our law has changed to a larger extent. So coming back, so now it is, be it manufacturing or non-manufacturing, all revenue expenses pertaining to the previous year is allowed. Idukku section 1. This is normal. Okay, revenue expenses of 3 years before commencement of business can be accumulated and claimed. All through section 35 you are going to see this. Okay, past period expenditure can be accumulated and claimed in the first year of operation. One revenue expenditure which will not be allowed is perquisites. To research personnel will not be allowed. Okay, any capital expenditure will also be allowed. Not only for the current year, of the past 3 years will also be allowed. But one thing which will not be allowed is cost of land. One capital expenditure which will never be allowed is cost of land. So I am repeating this. Revenue expenditure of the current year and past 3 years, if this is your first year of operation. Okay, this is your first year of operation, past 3 years also accumulate and claim. Capital expenditure of the current year and past 3 years, if this is the first year of operation, accumulate it and claim. One thing I will not allow is cost of land. One thing that is not allowed. Okay, right. Sir, I purchased a machinery. My dear friends, I purchased a machinery for research purposes. I claimed it as deduction. My research is over. My research is over. Now that machinery, I have two options. Sell it off. Whatever is the money realized is your business income. Section 41, deemed income. Okay, we already said in the first class itself why this chapter uses the word profits and gains. Some type of gains are also taxable in this chapter. So, if you sell the asset after research, whatever is the sale value, you will take it as income. And the bottom line is sale value over and above the original cost, capital gains. One side. Other side. The second option, I don't sell it, I transfer it to my regular block of assets. I transfer it to my regular. What value can be recorded? What value can be recorded? If I say, we wish that you become finance minister. Okay, the value to be recorded is nil. Neither 100% claimant here. The value to be recorded is nil. We have already claimed 100%. Okay. Take your previous material, depreciation material in the actual cost. First table first item will be that. In the actual cost of addition, in that table, you will find the first item to be that. Asset used for scientific research. Okay, asset used for, yesterday we were working, right, various cost of addition. I don't know first item. Okay, asset used for scientific research. Okay, and then transferred to normal block. Cost will be nil because you have already claimed the 100%. So, repeating, my dear friends, page number 15, last class. Still yesterday we are using. Okay, repeating, my dear friends, there are two options available to me post the utilization. After the research process is over, assessee has the option of transferring the asset to the block or directly selling it. Where the asset is transferred to the block, the value to be recorded is nil because you have already claimed 100%. Where assessee directly sells the asset without transferring to the block, then the money realized will be treated as business income, section 41. Okay, where the money realized is more than original cost, then it is capital gains. Contribution to external agency. Now, if you contribute to any agency, national lab, okay, IIT, IIM, any research association for scientific or social or statistical, 100% will be allowed as deduction. Okay, previously this was only national lab 200%, others 150%. Company in which the main object is research 125%. If you refer to your intern notebook, now that is gone. Everything is simplified 100%. Please read through the section once. Please read through from the top the section once. Please read through the section once. Yeah. If it is the first year of operation, then past 3 years can be claimed. If this is the first year of operation, you would not have claimed. This is the first year of operation. This is not the first year of this research. This is the very first year of your operation.
Sir, one doubt.
Yeah, go ahead, Ananya.
The whole of revenue expenditure pertaining to previous year is allowed as deduction. So for previous year, are perquisites allowed?
Yes, allowed.
Only for past
Only when
3
you are
years?
accumulating, it is not allowed.
Okay,
But
sir.
cost of land is never allowed anywhere.
Okay, sir.
It will reduce from the block value. Yeah, that we will do once.
Sir, the difference from the previous erstwhile act is that contribution can be made to any agency, not specified, and that there is no weighted deduction.
No, only the second. Weighted deduction is not there. Contribution should be made to an approved agency only, or to a company in whose main object is research.
Okay, sir.
I am looking into question number 15. I'm looking into question number 1515. The following are the details of Orchid India Limited engaged in the business of manufacture of pharmaceutical products. Sale, manufacturing expenses, administrative expenses, selling and marketing, finance expenses. Assets purchased are know-how. It is an intangible asset. 25% is the rate. Okay. Plant and machinery used in manufacturing operation. Okay. In May, in December. For research and development expenditure, research equipment acquired during the year, remuneration to scientists, expenses on research and development, contribution to an institution. The company has opening WDV 40 lakhs. The company had spent during the year 22 lakhs for construction of a lab for research purpose. The construction is yet to be completed. Compute the taxable income of the company. Read through the question. Okay. First, I will take up a small note and then explain you. This is with regard to construction of lab. The lab is yet to be completed. Nowhere we said put to use in scientific research. As and when the expenses are incurred, you can claim. Nowhere the scientific research, it is not 32 like depreciation. This is scientific research. Nowhere we have said that it should be. So remember that part of it. And always such a question in examination, also such questions, etc. Always start with the working note for depreciation. Okay, so that you will know what is the space required, etc. Otherwise, if you want to do the depreciation later from the answer, you will get confused. Okay, remember it is a manufacturing concern. Okay, it is in the business of manufacture, so additional depreciation will come for the two assets which are purchased during the year, plant and machineries which are purchased during the year. So I'm starting the solution with the depreciation working. That is the intangible. Okay, rate is 15% here, 25% here. Opening WDV, I think the 40 lakhs, I'll do it in absolute values. Nil additions put to use for more than 180 days. Put to use for more than, or actually it is 180 days or more. Okay, 35 lakhs. And I think the know-how is also from 10th April, acquired on 10th April, 25 lakhs. To use for less than 1 180 days, 65 lakhs. There is no sale value, etc. given. So directly I am going to balance available for depreciation. Normal depreciation will be 65 lakhs into 7.5% plus balance, that is 140 minus 65 lakhs into 15%. 65 lakhs into 7.5%. Okay, 65 lakhs into 7.5% plus the balance into 15%. Here it is direct, 25 lakhs into 25%. Additional 35 lakhs into 20% plus 65 lakhs into 10%. Total depreciation is 35 lakh 87,500. Okay. In the examination also, I insist you to write this note. Okay. So that you are communicating to the examiner, you know the provision. Okay. For the asset to use for less than 180 days, the balance 10% of additional depreciation can be claimed in the immediately succeeding year, or you can write it as 22-23. Okay, please write this note, that will give you an additional edge in the answer. Okay, that you know the provision. Why? No, it is on the addition, not on W. Additional depreciation is on the purchase value. Sales is 500 lakhs. Okay, less allowable expenses, less allowable expenses. Okay, manufacturing 100, administrative 50, selling and distribution 75, finance expenses 23. Scientific research expenses, scientific research expenses, research equipment 60 lakh, research equipment 60 lakhs, remuneration to scientists 10 lakhs, expenses on research and development, expenses on research and development 30 lakhs, contribution to approved research center, okay, 100% 10 lakhs. And please remember construction of lab, okay, this can be claimed even if it is not put to use, okay. This section 35 does not have the condition of put to use. You should have spent it for scientific research. That comes to 22 lakhs. Allowable depreciation, which we have it computed already. I'm getting an income of 84 lakh 12,500. 84 lakh 12,500. Check it out. The question that is asked is, can I make contribution to scientific research which is not related to my business and still claim this deduction? The answer is yes. Yes, contributions you will get. Suppose I'll answer one other question just to remember, later we will see that. You are not at all a business associate, but you contribute for scientific research. 80 GGA, 100% can be claimed. Yeah, yeah. Research donations, yeah, yeah. Yes. Later, when we come to filing of returns, I'll speak about how these are assessed. What the assessing officer will do from the other perspective. The receiving entity's perspective, I'll come and talk there. Question number 16. Swastik Chemicals has a research department and maintain registers pertaining to the department separately. The company had purchased the research equipment in the past year for 14 lakhs. Since the research process has been completed, the company intends to transfer the same. The present market value is 16 lakhs. What are all the following tax treatment? A. If the equipment is transferred directly. B. If it is transferred to the block, both B and C, and then subsequently sold off. Fourth question, if the company is amalgamated with another company and these equipments are taken over, how to deal with it? Read through, I'll answer. I'm going to answer it, okay, one by one. Question number 16. Case A is directly sold after research. Okay, according to section 41. According to section 41, where asset used for research is sold, then sale consideration will be treated as, okay, deemed business income. Deemed business income, where the sale consideration exceeds original cost. Such excess is taxable as capital gains. Where the sale consideration exceeds the original cost, the excess will be treated as capital gains. Now, in this case, okay, deemed income under section 41, business will be 14 lakhs. That is the original cost of the machinery, 14 lakhs. Capital gains will be 16 lakhs minus 14 lakhs. Okay. will be 16 lakhs, the sale value, because the present market value is 16 lakhs. So if I sell, I will fetch 16 lakhs. So 2 lakhs will be capital gains. Case B. Case B. What is case B? If equipment is transferred to a block, case B and case C, let us look at together. Computation of depreciation slash capital gains. Whenever it is saying block, come back to the only format we know, so that you are very categorically clear. Opening WDV, okay, both the cases, the opening WDV is given, and addition is 3 lakhs on 15th October. Okay, opening WDV 26 lakh 50,000 and 10 lakhs. Opening WDV 2650 and 10 lakhs. Additions. Scientific research asset transferred. You should write this, please remember. Okay. According to section 43 subsection 1, the cost will be nil as it is already claimed. So nothing will be recorded. Put to use for less than 180 days. You have an asset which is 3 lakhs. Addition of 3 lakhs on 15th October. Sale consideration 16 lakhs. In block, in case B, I have balance available for depreciation 1350. Whereas in case C, the block is gone. The sale consideration exceeds the balance available. So I will get short-term capital gain. Short-term capital gain. Okay, since the block is ceasing to exist, I will get a short-term capital gain of 3 lakhs. Okay, whenever you refer to the Excel sheets, okay, short-term capital gain will be go green, so that you will be easily able to plot. Case C, the block is gone out of existence. Why? Because the sale consideration exceeds the balance available. The block goes out of existence in two circumstances. All the assets in the block are sold, or if the sale consideration exceeds. Less depreciation. In this case, it will be 3 lakhs into 7.5% plus 1350,000 minus 3 lakhs into 15%. clear to you? Okay, right? Raja, are you clear? Antonio? Friends, I hope you are all clear. Okay, so whenever a block ceases to exist, please remember. So scientific, I'll do the fourth part before that. Two options are there. One, direct sales. Direct sales means totally an income. If it is more than original cost, capital gain. Transfer to the block, record it at nil value and sell. Okay, depending upon the block behavior, it will change. Case D answer, which is going to be consistent in case of amalgamation. Friends, for all cases of henceforth you are going to see for all three things: amalgamation, demerger, succession. Repeating, amalgamation, demerger, succession. The answer is the same. Provisions will apply to the transferee entity as it would have applied to the transferor entity had there not been an reconstruction. Provisions will apply to the transferee entity. So, the company which is taking over, the transferee company, will have two options: either to sell the asset directly or to transfer to their block and sell it. Provisions will apply to the transferee company as it would have applied to the transferor company had there not been an amalgamation or there not been an event. This is a constant answer from now on for everything. Okay, assessment also, same answer will continue. Okay, just because amalgamation is over, can the transferor company no more assessment? Illa. I will send a notice in the name of the transferee company asking them to open the transferor's book. Okay, so provisions will apply to the transferee entity. Okay, as it would have applied to the transferor entity had there not been an amalgamation. Is that clear? Okay, provisions, always this is the answer. We'll see further questions also. This will be the answer.
Sir, do we not have to compute the tax?
For
All these scenarios, sir, they've asked the tax treatment.
tax treatment done. Tax depends upon the total income of the company. This is just one event. Okay, so no, tax treatment means only the theoretical answer of how you will treat it.
Okay, sir.
So actually from last year, the scientific research is simple. Previously, they had a lot of complications. Now it is just 100%. Everywhere it is just 100%, and you just need to claim it. I'm going into the second branch in your, you would have written 4 branches. The first branch is scientific research. The second branch, that most important branch from the examination perspective also, is specified business under section 35 AD. Specified business under section 35 AD. So, a small preamble before going and understanding the section will help you appreciate it. The four finance ministers and their thinking has always been an inspiration in income tax law. Madhu Dandavate as a finance minister, okay, brought in a lot of income. Abarda, the block of Asatla in the 1988, okay. So he had a lot of influence on the income tax law. And followed by that, Pranab Mukherjee took twice the term, okay. Then the greatest architect of income tax law, Dr. Manmohan Singh, and then P. Chidambaram. Okay, they had their own level of thinking. Initially, during Dr. Madhu Dandavate's period, the thrust is more on 80H. You will never study that section, that is over with 2000. But I'm just telling you, upper deduction based. 100% of the profits will be allowed as deduction. 80H, HHA, HHB, HHC, it will go a long journey. Okay. When Dr. Manmohan Singh came to seat, he was more for exemptions than for deductions. So section 10 got a better 10AA, 10AB. 10AA is still a dynamic section. 10AB, 10C, 10D, 10E, like that, he gave more of exemption. In the initial years of Mr. P. Chidambaram, he again diverted back to deduction, 80I, which we will still study, 80IA, IB, IC, okay, 80I based deduction. At the fag end of his term, in the year 2010 onwards, the thinking of the government changed. What are we giving? We are giving deduction for profits. We want people to invest in this business. Okay. So what if they invest, whatever profit they earn, we are giving it as deduction. But what is our intention? Our intention is not to give them profit deduction. Our intention is to make them invest. So from a profit-oriented deduction, we went on to what is popularly known as incentive-linked incentive, investment-linked incentive. I am no more looking into what is the profit he is earning. I'm only looking into what I want them to come and invest. You invest, take the investment as the deduction, the capital expenditure. So they brought it under section 35. Whenever an asset itself has to be claimed as deduction, they will bring it under 35. So this is the paradigm shift in our thinking itself. Okay. So investment linked. So these finance ministers in the whole of income tax, we'll see 3 or 4 times how their thinking steered. Okay. Right. After that, no thinking, what can I do? Okay, so right, so this is a new level of thinking in investment linked incentive. What did we do? We started identifying sectors and said, if you make investment in this sector, you will be given deduction. Whatever investment you are making, you will be given as deduction. Once more, we started identifying sectors and said, if you invest in this sector, you will get deduction. Whatever investment, you will claim it as expenditure. Okay. Now, I'm again telling you a lot of things. Then we will go and study the theory. First, understand. I have already given 80I. I already have 10AA, which are still dynamic. Now, so as a businessman, I invest, I claim 35 AD. I get profit, I claim 80I. Is it possible? No. So all these 3 sections got one statement. If you are claiming under this section, the other two you cannot claim. All the three will have the same wordings. So assessee can choose whether he want to go by 35 AD or 80I or 10 AA. But all the three sections has the same wordings. If you are claiming here, you cannot claim, and you cannot claim deduction or you cannot claim exemption in 35 AD. If you are in exemption, if you are claiming here, you cannot claim 35 AD. Like that, all the sections were incorporating the words. Okay. This is the place also to understand some terms. Let us go slowly. What are all the deduction? These are all the business. There are 20, 21 businesses. As a student, first let me tell you, should you remember this? The answer is no. In exam question itself, they say either 35 AD or specified business. They use these words. I mean it. They use the words either section 35 AD or specified business. So you need not remember all these things on a broad line. Cold chain facility, agricultural storage. We know that a country where our agricultural production is very massive, but our storage facility is very poor. Perishable items we are unable to store. Except Food Corporation of India, no big this there. Okay. 2-star hotels, 2-star or above category, hospital with 100 patient bed, okay, housing projects, all types of housing project, okay. This is affordable housing project, which you will also see in 80 IAC, okay. And you will continue to see this affordable housing in various places. No, not luxury, only affordable. This is our Prime Minister's dream of everybody should have a home. Okay, in that production of fertilizer, honey and bee waxing, wafer manufacturing, etc. All these things, you need not remember everything. I assure you that it will be given to you. Okay, don't worry. What are all the conditions? Let me go clear. It should be a new business. From now on, at least in 10 different sections, I am going to tell you new business. And all of them, what is the intention? What is new business? It should not be formed by splitting up of an existing business. So, company started 20 years before. Shakti Sugars Limited, 100 years are come. Now only 35 AD come. So they bring new Shakti Sugars. That is not my intention. It should not be formed by splitting up of an existing undertaking, demerger. Number 2, it should use new plant and machinery. The plant and machinery block should be new. However, 20% can be second hand, which means 80% should be new plant and machinery. So this section, 80 IAC, all 80 Is, 10 AA, everywhere new business means, even if I wake you up at midnight and ask you what is new business, you should be able to tell. 2 conditions. It should not be formed by splitting up of an existing undertaking. 2, it should 80%, you can directly 80% can be new. Now, from whatever I told you yesterday, I'm taking a small deviation. Here, a imported machinery is a new machinery. A imported second-hand machinery. From this section onwards, what is new? The definition itself is depreciation on such machinery is not claimed under Indian income tax law. It becomes a new machinery. If depreciation is not claimed, so imported machinery will be taken, second-hand machinery will be taken as new machinery. Okay, so it should be a new mandatory. It should be a new business. should not be formed by splitting up or reconstruction, should be new. Out of the total, 20% can be old. How similarly, second-hand imported machinery is treated as new provided no depreciation is claimed under Indian law. And you want somebody very honest to certify this? Books needs to be audited. So auditing of books is mandatory. Is not just 44AB. It's not just 44AB. The continuous third section you are seeing, okay, books needs to be. So what are all the conditions? New, what is new, and books needs to be audited. If these conditions are fulfilled, what is the deduction? 100% of the capital expenditure incurred during the previous year is allowed as deduction, and also past expenditures. Where the business has not yet commenced, then the same will be accumulated and claimed in the previous year in which business commences. No deduction for land, obviously from this year goodwill also, okay, and financial instruments like shares, securities, etc. you are investing. And if you are spending more than 10,000 by unapproved modes, that also no deduction. No, I'm coming to consequences. If deduction is claimed here, you cannot elsewhere claim. No depreciation on such assets can be claimed. No depreciation. You cannot claim depreciation when you are claiming 100%. Okay. If you sell the asset, section 41 will be applicable. If you sell the asset, it will be 41. I'll come to this inter-unit little later. Loss under specified business can be carried forward and set off only against income from specified business. Loss from specified business can be carried forward and claimed only under specified business. Okay. And the carry forward is for an indefinite period. Till you set off, I will allow you. Not 8 years or something. Till you set off, I will allow you. Okay. Now I gave you an example of Shakti Sugars. Let us take hotel or hospital, etc. I am already having a hotel which is constructed some 15-20 years back when 2000, when specified business, when 35 AD is not in existence. Repeating, it is not 35 AD, it is not coming under 35 AD because 35 AD was not there at that time. Now I start another hotel which is eligible under 35 AD. That old hotel I have a profit. In this new hotel I have a loss. The loss is loss from specified business can be set off only against another specified business. This is not a specified business. But now the CBDT has clarified, boss, this is not a specified business because at that time it is not there. The provision itself is not there. Okay, so clarification issued by CBDT specifies that loss can be set off against the profit of another specified business irrespective of whether the latter is eligible under section 35 AD or not, because you would not have, that was not there. That's why it is okay. The intention is do not set off the hotel business loss against iron and steel manufacturer, against software business. But if you have two hotel businesses, one not covered under 35 AD, another covered under 35 AD, this loss can be mingled and set off against the other one. We will do a question also and come back to this. This inter-unit transfer, I will come. Which one? The second one is a new business. We have a hotel. Okay, let us take, I have a hotel in Chennai. I am starting a hotel in Salem. No, it will qualify under 35 AD. For that business, okay, it is not splitting up. It is a new hotel and a 2-star or above category hotel where I am investing. It will qualify under 35 AD. New business does not mean the assessee should not have done that business earlier. New business means don't try to transfer plant and machinery from here to there and start a new business. That's what they mean. Okay. Kindly leave the last two parts to me. Okay. Kindly read it once from the top. Read from the top. Okay. So for specified business, what are all the things we should remember? Don't worry about the nature of businesses. Don't worry about the type of businesses. Okay, they will give you in the section number or specified business. It should be a new business, not split up. 80% of plant and machinery, imported machinery is a new machinery. All expenses allowed as deduction, all investments allowed as deduction. Investments of past period can be accumulated and claimed in the first year of operation. No deduction for land, goodwill, and financial instruments. Loss of specified business can be set off only against the income from specified business. Okay, and if there is a similar business which is non-specified, they are now allowing it to be set it off. Okay, okay. Inter-unit transfers, etc. I will come. Now, claiming 35 AD is optional. Okay, I'll tell you why also. It's optional. When we go to 115 BAABAB, we'll be clear. Question number 5A. Sorry, unit number 5A. Question number 17. Indian Hotels Limited is involved in running and maintenance of hotels. Started a new 3-star hotel at Ayodhya. Incurred capital expenditure 300 lakhs, which includes land, building, equipment, special care zone, goodwill, financial instrument during the previous year 2021, which were capitalized. In 21-22, the company incurred further construction cost of 65 and additional lands of 50. Compute the amount of deduction under 35 AD. If the company has loss, how the same should be treated. If the company has another hotel in Kanchipuram, which has earned an income of 50 lakhs, what change will be there? Suppose if the hotel is let out on franchisee model to another person and India Hotel Limited only receives royalty and rent, how the provisions will apply? Read through. Is it stuck now, Hari? Hariharan? Okay. We are looking into this question. So, question number 17. Computation of deduction under section 35 AD. Computation of deduction under 35 AD. Okay, expenditure incurred prior to, okay, financial year 21-22. Prior to financial year 21-22, cost of land not allowed. Okay, please write cost of land and say nil. The examiner should not think that you have not read that line. The examiner should know that you know the provision. So cost of land nil, building 75 lakhs, equipment 90 lakhs, special care zone 30 lakhs, goodwill 10 lakhs, goodwill not allowed. Further construction cost 65 lakhs, additional land not allowed. Two crores 60 lakhs is the total expenditure. This can be claimed in the financial year 21-22, that is year of commencement of business. This can be claimed. This 2 crore 60 lakhs can be claimed in the financial year 21-22. That's what the question starts with, right? ஆமா ஆமா ஆமா. Yeah, yeah. During the previous year 21-22, the company incurred further. Question number 2. If the company has loss from the said business, how the same should be treated? Case B. Loss from specified business can be carried forward and set off only against income from specified business. Okay, the loss can be set off only against income from specified business. Indefinite period of carry forward. The carry forward can be for multiple years, okay, but you cannot set it off against any other business. Case C, that is the exception. There is already a hotel in Kanchipuram which is established in 1980 itself, which has an income of 50 lakhs. This is the exception to whatever we have written. That is the same business, but not qualifying under 35 AD. That's all. So here CBDT has clarified, you can set it off. Yes. Case C, for the above rule, there is an exception where it is a similar business, which is not qualified under 35 AD, then the profits of such business can be used for setting off losses arising from specified business. Okay, okay, are you clear? Right, right. But there is a party affiliation. You have a strap with red, white, and black. So party affiliation, ஏன்னா அது முன்னாடியே சொல்லிட்டேன்னா I will be careful. I'll be careful because previously I used to drag Mr. P. Chidambaram like anything and everything. For every provision, I used to drag him. One of the student has told me, என்னைக்காவது ஒரு நாள் சிதம்பரமோட ரிலேட்டிவ் யாரா கிளாஸுக்கு வர போறாங்க, that day உங்க வீட்டுக்கு ஆட்டோ தான். So from that day I used to ask whether, so that's why. Okay, fourth question, this is interesting. Suppose if the hotel is let out on franchisee model to another person and India Hotel Limited receives only royalty or rent for such franchisee, how will the provisions work? For Marriott, Taj Properties, Welcome, the property is developed by a person, they then give it to Welcome Group or Marriott Group to manage it, etc. So now I will take you to the conditionalities once. Okay, building and operating a new 2-star hotel. Building and operating a hotel of 2-star or above category. Here I have built, I have not operating, I have given him to operate and he is paying me rent or royalty for that. Can I claim 35 AD? Building and operating. That's what I'm asking. Is it that the same person who builds should also operate, or can it be that building can be one person and operations can be done by another persons? You think it is done by another person? Anybody from the online? Can you answer this?
They can claim deductions.
They can claim deduction.
It is similar to leasing a vehicle.
It is similar to leasing a vehicle. I
Yes.
appreciate your immediate recollection. Okay. See, the law and or are interchangeable. Supreme Court went one step ahead and say intention of investment only is important. Intention of investment is only important. Has that been fulfilled? Have you built it? Yes. You have incurred a capital expenditure. And is he operating it as hotel? Yes. You should not build an assembly building and then operate it as a hospital. Okay? No way. I'm not a kitten. Okay? Right? Okay? So that is, you have built it as a hotel, operating it as a hotel, acceptable. Okay? Acceptable. It need not be by the same person. The condition is it should be built as a hotel, operated as a hotel. He has the technical. Nejmawe, all hotels, the ownership and the management is by some other. Because the management is a different, altogether different dynamics. Okay, so the Supreme Court, same case law, the heading of the question, Indian hotels. Okay, very old case law. It can be building and operating need not be by the same person. Okay. So question 4. For qualifying under 35 AD, building and operating need not be by the same assessee. Okay, it should continue in the same business. You cannot change it. That's all. If it is built and operated by some other person, still the benefit of, okay, is provided. Another person can use it. My income, I will have to pay separate tax on what income I derive. Yeah, that's what the question itself says. What you derive is just a royalty or rent. Yeah. And that is a business income for you, yes, against which 35 AD expenditure can be claimed. Whatever construction cost you have incurred. Tell me, where are you stuck? Question number 18. Mr.
Sir,
A.
I have a doubt, sir.
Sorry?
I have a doubt, sir.
Go ahead, Sudha.
So, suppose he builds it as a hotel and gives it to another one who converts it into a hospital, which is also a specified business, then what will happen, sir?
The question, I hope you are able to listen. If I build it as a hotel, give it to another person who converts it into another specified business, hospital, will the deduction? In my opinion, no. I mean, there is no case law or precedence, or there is no, in my opinion, no. When you get the approval, you would have got the approval only for hotel, and now converting it into another business, though even though qualifying under 35 AD, I don't think you can claim.
Okay, sir. Thank you, sir.
Mr. A commenced the operation of the business of setting up warehousing facility for storage of food grain covered under 35 AD, sugar covered under 35 AD, and general and edible oil, and the business commenced on this year, 1st August 2021. He incurred capital expenditure of 80, 60, and 50 for purchase of land and building during the financial year 2021, exclusively for the business, and capitalized the same. The cost of land included were 50, 40, 30. So out of 60, 10 lakhs is building, 10 lakhs is building, 30 lakhs is building, 20 lakhs is building, and 20 lakhs is building. The other thing is cost of land. Further, during the current year, incurred expenditure of 20, 15, and 10 respectively for the extension of the building. Compute the income under PGBP for the year and the loss to be carried forward, that assuming Mr. A has fulfilled all the conditions specified under 35 AD and has not claimed a deduction or exemption. That's what I used to say. The profit of the business of letting out warehouse facility before claiming 35 AD or 32 is 16, 14, and 31 lakhs respectively. Read through the question. That is, if you claim 35 AD, you cannot claim 80I. That's what it is not claiming chapter 6. First 35 AD. Grain sugar. So here it is 80 lakhs, and the land cost, the cost of land included in the above 80 lakhs is 50 lakhs. 80 minus 50, that becomes the building cost. Again 50 lakhs minus 30 lakhs. Is this clear? Is this clear? Ananya, are you there? Not there. Can I ask you a doubt? Why am I not claiming depreciation for the financial year for this building? Now opening WDV எடுத்துன்னு வராம total building cost 20 lakhs I am taking. Put to use, that's the answer. Put to use only this year. 1st August. That is why. Okay. That is why I have not claimed 20 lakhs into 10% in the last year and taken 18 lakhs as the opening balance. Why I have not claimed is because, okay, I'll write as a note itself. Okay. Depreciation for building is not claimed in FY 2021 as it is put to use only from 1st August 21. Okay, so this is put to use, so only from financial year 21-22 you can claim. That's why I have not claimed. Profit before claiming depreciation or 35 AD. 16, 14, 31. 16 lakhs, 14 lakhs, 31 lakhs. Less depreciation under section 32. We just found out 3 lakhs. Less expenditure under 35 AD. Since I am claiming 35 AD, I cannot claim depreciation for these two things. 50 lakhs and 35 lakhs. Loss from specified business. Loss from specified business. This can only be carried forward and set off against another set off against specified business. You cannot set off this loss against edible oil. Okay, it has to be carried forward. Okay, profit from edible oil. This is separately taxable. Are we clear? Right? So, this is how we need to understand. Another wonderful question, again a long travel question, which will be very interesting to understand. On 1st September 21, the company commences the operation of warehousing facility in Andhra Pradesh for storage of agricultural produce. The following information is available from the records. Expenses incurred before 1/4/21, purchase of land, construction of warehouse, purchase of know-how, salary to staff, these were capitalized. Expenditure incurred for 21/22, construction, purchase of old plant and machinery from domestic market, purchase of old plant and machinery imported, purchase of new plant and machinery, purchase of goodwill. Profit and loss account stood as follows: depreciation for building, machinery, know-how, other operating expenses, donation to political party, net profit. Out of the other operating expenses, payment of 40,000 is made in cash, otherwise everything is deductible. Find out the taxable limited income of the company for the assessment year on the assumption that the company has the following income from other sources: commission 20 lakh 15,000, dividend from foreign company 50,000. Read through once. Lot of things to understand on a holistic basis. Let us try to. Okay, a question which will serve the whole provisions in a better manner. First, let us test the condition of the 20%. Okay. Second hand plant and machinery from domestic market. Second-hand plant and machinery from domestic market is 2 lakhs. Second-hand imported plant and machinery. Second-hand imported plant and machinery 4 lakhs. New plant and machinery 9 lakhs. Total block value of plant and machinery. Total block value of plant and machinery is 15 lakhs. Total block value of plant and machinery is 15 lakhs. 20% can be second hand machinery. Okay, 15 lakhs into 20%, 3 lakhs can be second hand machinery. Okay, imported second hand machine will only be treated as new for the purpose of this section. We all know it will be treated as new. So only one second hand machinery is there, which is 2 lakhs. Okay, which is 2 lakhs. You can have it up to 3 lakhs. Hence the condition is fulfilled. Hence the condition is fulfilled. Repeating, 15 lakhs is the total block value. Out of the total block of plant and machinery, 20% can be old or 80% should be new. 20% of 15 lakhs comes to 3 lakhs. So the question is, if it is more than 3 lakhs, second hand machinery, you are not eligible for 35 AD at all. Go by the normal method, claim depreciation only. Any imported machine, the question itself is for that purpose, to make you understand that any imported machine, even though it is second hand, it will be considered as new for the purpose of this section and few other sections. Am I clear? So working note for expenditure under section 35 AD. Expenditure incurred prior to financial year 21-22. Purchase of land cannot be claimed. Cost of construction, cost of warehouse, $8 lakhs. Know-how, $10 lakhs. Because it is before commencement of business, so normally it should be capitalized. It is for some supervision charges, etc. salary. Once after commencement, salary and all are revenue expenditure. Yeah. Yeah, you can claim it up to 20%. If it is there, you can still claim it. No problem. You can claim. Any expenditure prior to commencement of business should only be capitalized. So if it is not here, it would have been 35D preliminary expenses, something like that. Huh? You cannot claim goodwill. We cannot claim land, goodwill, and financial instruments. Net profit as per profit and loss account. 53 lakh 49,000 and inadmissible expenditure. We cannot claim depreciation and all because we are claiming the building or the asset itself as deduction. Depreciation for building 3,40,000. Though we are going to see the section later, but little idea of section 40A subsection 3 disallowance. Cash expenses in excess of 10,000 wholly disallowed. 40,000 dana? Donation to political party. Donation to political party 10,000. Less expenditure under 35 AD. Less expenditure under 35 AD. 93,78,000. Okay. Loss from specified business. This cannot be set off against our commission or dividend from foreign company. Takai King Laughlin. There are other sources of income, so the question. Loss from specified business to be carried forward is that 22,89,000. Other sources, commission 20,10,000, 2015, dividend from foreign company 50,000. Okay. Okay. Though I assure you that you will study this later, but still, deduction under section 80 GGB, donation to political party. The 10,000 you can claim. We will study this. Don't worry. 10,000 you can claim. So the total income, even though you have a loss, but still you will be paying taxes. Okay. Sorry. Worst of all is providing like this and withdrawing it in 115 JB. You cannot claim it under 115 JB, and you will pay 15% instead of 25%. So technically, the bigger benefit is lost. It looks fancy, but technically it's lost. यार सत्ता get the यार we saw the kadokanta. Okay, data. Right. Okay. Now, this part I'll come to it later. Inter-unit transfers only at market price. I'll come to it. Okay. Now, what people did, they bought an asset for specified business and then transferred to a non-specified business. If they had sold, at least section 41 would have taken care of the income. They bought it and then transferred to a non-specified business. Inter-unit transfer of asset. Okay. Personally, I have never stopped before this, after this 5 years. Or 2016-17 when I stopped with this question and said, tomorrow morning, let me come back and continue with inter-unit transfer of asset. That day evening, while playing shuttle, I had the fall and my ankle broke. I didn't come back for 1.5 months to the class. Okay. The wonder of brain is something like this. They were taking me to the surgery operation theater, and I was all along thinking the inter-unit of inter-unit transfer of asset I should start. So the doctor was, the anesthetist was speaking to me and said that he is going to place the mask wherein I will forget. I was worried that I'll forget Income Tax Act. I'm honest to you. I got so worried that what if நான் திரும்பி வந்துட்டு அவங்களுக்கு inter-unit of transfer of asset I should. So, and the beauty of brain is it was a little long surgery, and after that, the surgery was morning 6 o'clock. When I got back my consciousness, it was around 3 p.m. And the first thing that struck me was I should go back to the classroom to teach inter-unit transfer of assets. So that is how brain works. That's what I understood. So from there onwards, I have ensured one thing. ஒன்னா 35 AD நடத்தவே கூடாது, இல்ல ஃபுல்லா நடத்தி முடிச்சுட்டு தான் நீ கிளாஸ் முடிக்கணும். Okay, so inter unit transfer of asset. No, it's only a small thing. Where an asset is purchased for the purpose of specified business, is transferred within 8 years, then there is an income. Okay, what will be the income? Had you purchased asset directly for the non-specified business, you would have claimed depreciation. So, original cost of the asset less depreciation that would have been charged had the asset not been used for non-business. Okay, non-specified. So I want to treat it as income. You purchased it for specified business. Okay, when it will happen? Now, ஒரு eligible housing project, I am buying some equipment. That project is over. Now I am transferring it to my regular housing projects. Okay, inter-unit transfer of asset. Okay, don't ask me how the income tax officer will know. That is why the honest chart accountant is there. Okay, right. ABC Limited is having 2 units. Unit A carrying on specified business of setting up and operating warehousing facility for storage of sugar. Unit B carries on non-specified business. Unit A business commenced business on 1st April and claimed deduction for 100 lakhs under 35 AD for 2 buildings, each costing 50 lakhs used for the said business. However, in Feb 2022, Unit A transferred one of its building to Unit B. Explain the tax implication. So you already claimed 50 lakhs, and I thought for 8 years you are going to hold it for in specified business. Now you are transferring it to non-specified. Had you originally purchased for non-specified, I would have only given depreciation. So reverse the amount, reverse it after giving the income. Start doing it. All such small questions. This is also an examination question. In examination, please write the theory first. That is, inter-unit, it should be maintained for 8 years. Where it is transferred, it will be deemed to be an income and the computation. Okay, please remember that. So this is the reversal. 40 lakh 50,000. Remember, we can only find out the 1st April value. Depreciation is a 31st March concept. Third year, the non-specified business will claim the depreciation. That is for the financial year 21-22. The non-specified, because it has been transferred to non-specified, in their P&L, they would have claimed the depreciation. Okay. Okay. So this is what. So 35 AD inter-unit of assets. Okay, the transfer. This is one question, one case law in 35 AD, which is approval. I started constructing the hotel or whatever. I started incurring the capital expenditure, but I got the approval later. Can the expenditure before approval also be claimed? Yes. High Court said, look, the intention is investment. You want to promote investment. Yes, not that it has not at all been approved. Okay. Can 35 AD be claimed on the basis of assessee has commenced the operation, made an application for 3-star category, but the same was granted by the authority in the subsequent year due to completion of inspection? Yes, assessee is eligible to claim. Provision was introduced for benefiting a particular category of entity and should be interpreted liberally. Okay, so even if the approval is late, it can be claimed. So this is 35 AD, the second branch of 35. But this is very important. 35 AD, we will continue to see a lot of questions both in assessment of firm, assessment of individual, assessment of companies, because how it changes when it goes to 115 JB or 115 BAC, where you cannot claim this expenditure, how the things will change, and also 115 JC, alternative minimum tax, that is for non-companies. 115 JB is for companies, JC is for non-corporate assessees. There again, whatever 35 AD we claim should be added back. So one side we are giving the benefit, another side we are pulling the trigger for that. Okay, anyhow, this is 35 AD. The next two branches we'll start tomorrow morning with the social welfare deduction and amortization. Hopefully we will be going up to 37 all the case laws and see the introduction of 40 tomorrow. Okay, meet you 6 a.m. tomorrow morning. Thank you, friends of online also.